Hey everyone, welcome to the channel. I'm Doug the Retirement Guy with the Monthly ETFs. Today we have a video on the top 10 ETF picks, the monthly distributions, who pays the most, and who runs with the NAV stability. We're going to cover it all today, and before we do, we got to do a shout out to all of our Patreon supporters and all of our YouTube subscribers. You guys are amazing. You keep this channel rolling. Don't be afraid if you're not part of the membership. Don't be afraid. Hit that subscribe button. Hit the bell notification. They're both free. Also, join us with Patreon. There's more information behind the scenes, and that's free also. And you can also always support the channel. So let's get into today's video. Notice to all viewers, past performance does not guarantee future results. This is for educational and informational purposes only. I am not a financial advisor, nor do I offer this as financial advice. If you're looking for financial advice, always contact a financial advisor. Let's go over the analysis and the criteria that I used in choosing these 10 funds of these monthly paying ETFs. The first was the monthly distribution schedule. Each ETF had to have the potential of paying monthly dividends to be considered into the ranking. I wanted to see what they've had in the past for payment history and what are they looking forward in the distribution frequency for the potential of long-term payments. The next one we looked at was the NAV stability. The fund must demonstrate no significant long-term erosion of their net assets. And then I ranked them all by yield. And I'll show you also the total year-to-date returns to give you a better idea of those numbers because that's the important number to work with. But we basically ranked them all by yield. Now, I also want to give you a little insight of understanding NAV erosion in high yield ETFs. So really the question is, what is NAV erosion? We've covered this in a couple different videos, but I wanted to go back and do this one more time with everybody so they understand, because NAV erosion is used so heavily, so overdone, that people lose track of what actually NAV erosion is versus market condition changes. So NAV erosion is basically the gradual decline of a fund's net asset value over time. I put over here you look at the chart that we used, and I went over a fund over 6 years. And if your fund started off at $100 and one year got up to $110, and the next year dropped down to $100, that really is not NAV erosion. That's just market potential, market changes, and adjustments. And we'll get deeper into it later in the video. But also, when you have a consistent time, over a 12-month period, that's when we start saying we have NAV erosion. That's where we're seeing a just constant downward trend. So it is an important part, and it is something you do need to understand, and I need to understand when you're investing in high yields, that this can be a part of it. The top 10 ETFs ranked by dividend yield, I got to put a disclosure out there. All performance figures and the yields mentioned are as of November 2025 and may change over time. Let's get into number 10. So our top 10 ranking by dividend yield, number 10, SPYI, the NEOS S&P 500 Income ETF. NEOS S&P 500 uses large cap equities. The fund aims for tax efficient and monthly income by actively investing in stocks and options of the S&P 500. The fund employs a call spread approach that uses SPX index option future contracts. This was launched in August 30th of 2022. So this thing has good over 3 years under its belt. So it's seen some good times, bad times. The yield on the fund is 11.75%. The year-to-date return is 14.41%. A very controllable expense ratio of 0.68%. and they have $5.9 billion under assets. When we take a look at the fund, very stable dollar-wise. You can see that April 2nd, the tariff issues dropped off. And ever since then, the fund has slowly regained its position back, giving us that potential of long-term growth. When we look at the performance chart directly from their information, year to date, they're at 13.58%. Now, this is the all in the average annual return, which includes dividends. You can see year to date 13.58, 1 year 13.19, since inception 14.36. So some very solid returns. Coming at number 9, AIUI, another NEOS. This is the Gold High Income ETF. This one launched in June 5th of 2025. And basically what they do is a high monthly income by investing in gold ETPs, combined with synthetic options and covered call strategies. So they're really working in the gold sector of the market. 12.96% yield, 20.16 year-to-date return, little higher expense of the last one, 0.78, and they have $167 million in assets under management. We take a look at the chart. We see a steady growth again, that 7.20% year-to-date growth, along with 1 month, they're up 1.76%, and since inception, they're up 33.35%, including the dividends. Number 8, TSPY, the TAP Alpha S&P Growth and Daily Income ETF. This one came out on August 14th of 2024, so we're well over a year into the process. This one works really with U.S. large cap equities. The fund holds a long exposure to the S&P 500 index and writes daily out-of-money calls using 0 DTE options. And that's how they start generating some of those dividend yields, is from those out-of-money calls. The fund has a 0.77% ratio and also has $132 million under assets under management. We look at the dividend that they pay at 13.8% and a year-to-date return of 14.52%. We look at the chart. Again, the only downfall that we've seen was the April tariffs that we'll see on a lot of different reports in this 2025 season. But we're still seeing some solid returns coming back from the funds. So our performance on TSPY, you can see 14.76% year to date, 12.85% 1 year, and 17.79% since inception. A very potential strong long-term package. Now at number 7, QQQI, the NASDAQ 100 High Income ETF. This fund here, the fund seeks high monthly income through the NASDAQ 100 stocks and call options, pursuing potential equity growth in a tax-efficient manner. QQQI was launched in January 30th of 2024. So this fund works to give you the dividend yield of 14.3% with a year-to-date of 17.60%. Expense ratio is 0.68%, and assets under management are $6.05 billion. When we look at the chart, you will see that 3.3% growth this year, even with the drop-off that was done in the April 2nd tariff implementation. When we take a look at the performance, when we add the dividends and the performance of it, you will see in year-to-date 16.40%. 1 year at 19.07 and 20.46 since inception. So coming in at number 6 will be Omaha, the Vista Shares Target 15 Berkshire Select Income ETF. Now this one mostly invests in large cap equities, and the fund actually actively manages a narrow portfolio of select securities from the Berkshire Hathaway position. So they do this by doing some covered call strategies, trying to generate the dividend yield that they post of being 15%. Now, using those large cap stocks, Omaha was launched in March 5th of 2025, and so far they've had a year-to-date return of 10.48%. And they have an expense rate of 0.95% and annual assets under management already of $622 million. Very quick growing fund. Now, why the difference between the dividend yield and the year-to-date return? Unfortunately, this fund has lost 4.52%. So since the April drop-off, they've recovered but have not managed back up to the level that they were ahead of time. That comes from the covered call strategy. So it caps the upside of those funds. So this is not NAV erosion, as we talked earlier. This is not what we're talking about. This is just price and the way a fund operates, that it does not have the upside potential. It has not had long-term drop-off. You can see where the fund has come up, it's come down, it's come back up. So there is not NAV erosion onto this one. So far they have since inception 8.25%. So we do definitely see there's going to be continuous growth from the fund. Now at number 5, DRKY, the Vista Shares Target 15. Now this fund here, I'm going to tell you straight out on this one, this is a brand new fund. This one opened up October 8th of 2025. So the first question is going to be is why is this in the market? Because the Vista Share Target 15 have shown such great responses so far, that we see that they have in their portfolio, in their information, they post out that the dividend yield will generate 15%. So they're telling us up front that we're going to be able to generate that 15% dividend yield with full potential. Now this fund came out. This one uses the U.S. equity investments and income generation. They're using the global microeconomy strategy. This was pretty much based off of the Stanley Druckenmiller, basically to generate that high income. The expense ratio is 0.95, and they're at 2.06 million in just the first month alone. When we take a look at what they've done, the 15% that they've already projected will be out there. They've already been able to gain 5.2% over the first 30 days. So we're at a 20.2% return. Now I do have to clarify that this is a brand new fund, and these numbers will change dramatically as the fund slowly matures. Everything according to what I see so far, the 15% potential is very strong. TDAQ comes in at number 4, the TAP Alpha Innovation 100 Growth and Daily Income. Now I'm going to tell you again, this is a brand new fund. This one came out on September 4th of 2025. But TAP Alpha, using the, I'm going to just call it the NASDAQ 100. They're using an innovation so they don't have to pay the NASDAQ copyright fees. They are doing this again with these out-of-the-money calls, 0 DT options on the NASDAQ 100 index. The dividend yield to date has been 17.41%. The year-to-date return, 23.49%. So when you look at what they did with the S&P 500, they're doing the exact same thing now with NASDAQ. So the fund has some experience from the managers just using a new fund to do the same exact thing. So when we take a look at that, they're already at $28.79 million in assets under management, and they have a very nice controlled expense ratio of 0.68%. So the fund shows some definite potential from some good growth and some good dividend income. Being here that it's only basically 2 months old, the fund is already since inception is up 52.01%. So it shows that we've seen some solid return so far. Number 3, KQQQ, the Curve Technology Titan Selection. This fund here came out July 22nd of 2024. I personally own this fund. I have done some legwork on this fund. It is definitely an active managed fund. It's actively generating income and pursuing capital appreciation, which is what I like out of the Curve programs. When I put something in my portfolio, I want capital appreciation, and these guys are able to bring this to the table. So their concentration is on large cap technology stocks. They take themselves out of that Magnificent Seven when they can dig deeper into the technology to find the funds that are really generating both growth with income. So when we take a look at the numbers, this thing paid out its dividend yield 17.70%, a year-to-date return of 24.28%, expense ratio 0.99%, with $58 billion under assets under management. We look at the long-term chart, came out on April 2nd, has done well all the way up to where it's at today. And to me, it's a very price-sensitive stock at $29.01. When we look at the history that the thing has from its performance, you will see in year-to-date 17.08%, 21.98% for 1 year, and inception is 22.92%. So it has some track history that we can look at. Number 2, BTCI, the NEOS Bitcoin High Income ETF. With the volatility of Bitcoin, with the volatility of the crypto markets, this one came out on October 17th of 2024. And they mostly invest in long BTC and short US currency. The fund is a fund of funds that seeks high monthly income with the potential for appreciation by investing in ETPs, with the exposure to Bitcoin while utilizing call option strategies. The generation of dividend, 28.3%. Year to date, their total return is 19.13%. Expense ratio 0.99, and assets under management are $908 million. Now, why are we see a difference between year-to-date return and what the dividend has done? Is basically what we have seen in the past 60 days. The volatility of Bitcoin has settled dramatically down. When that settles down, we see a change in dividend, we see a change in returns on a fund. And you can see, again, this is not NAV erosion. This is a price-sensitive type fund, and we're seeing about a 9% drop right now, just over the past, basically, again, 60 days. We look at the performance of the fund, year-to-date 15.38%, year-to-date 33.06%, and since inception 42.45%. So the numbers are showing that we do have a fairly potential for consistency in the fund. So our number one fund, Maxi, Simplified Bitcoin Strategy Plus Income ETF. Now, Maxi will operate very similar to what we just saw with BTCI. They both do the investment of long-term Bitcoin and short the U.S. currency. The fund is actually managed and it provides both capital appreciation and income. The fund holds those long Bitcoin futures and short-term debt instruments. The near-term equity index put or spread of Maxi was launched on September 29th of 2022. So this fund shows a dividend yield of 43%. The year to date so far is 25.6%, with the forecasting of them hitting at 43%. You can see that they've had a drop off in the last, again, 60 days because of the failure of the Bitcoin volatility. The other drop off that they had was the April 2nd tariffs, which they recovered very quickly from. Now we're looking for more volatility out of the Bitcoin strategy. The expense ratio is another thing that people will miss. 6.1% expense ratio. You have to put an asterisk there because 5% of those expense ratios are interest-bearing or debt-related instruments from those short-term debts that they deal with. So you are putting a shorter amount of your money to work with that, but it's part of their program to generate the potential dividend yield. They have 55%, $55 million under assets. When we take a look at their performance, now let's show you in 1 month, they're down 28.41%. Year to date, they're up 0.02%. So it's been very flat. And the last month, and last actually 2 months, has really taken a major hit to Maxi across the board. 1 year, they're at 19.23%, and since inception, up 57.77%. This is the volatility, and this is the danger of extremely high dividend yield programs. But across the board, that gives you our top 10 reports. So the top 10 ranked by dividend yield: Maxi, BTCI, KQQQ, TDAQ, DRKY, Omaha, OMAH, QQQI, TSPY, IAUI, and SPYI. Now you turn around and take a look at those total returns. That's another thing to evaluate. And you will see there are some nicer valuations actually in spot 3, 4, 5, and 6 that give you a nicer total return. So now the investment strategies of those pieces, well, they all generate income differently. Some are using covered calls like QQQI, BTCI are all generating income from existing holdings. That limits the upside potential, but has a lower volatility than the underlying holdings. The multi-strategy one, like KQQQ and SPYI, partially covered calls often provide greater price appreciation, and they're limiting themselves to 15 to 20 stocks. So that's a different way that they operate. And then the index tracking and active management that you see in many different funds out there, they're tracking the S&P 500, they're tracking the NASDAQ 100, they're following those across the board. So conclusion and investment considerations. Yield versus stability. I believe you need to keep your yield positive, but you got to watch your stability. You need some growth out of every fund. This is why in my portfolios, I don't always look at just yield. I look at total returns. NAV performance. If you're not evaluating the NAV performance, you're missing out. You have to understand, A, what NAV is and what the fund is doing. You got to do your own comprehensive analysis. You got to do your own work. Investment considerations. Consider QQQI that has a nice solid 14% yield with a nice total return. But the risk factors, you always got to know high yield ETFs with poor NAV performance is just a return of capital. And leverage ETFs are not always sustainable for income. So overall, what do you think of my top 10 picks? We tried to do the research. We did this over 222 different funds to find these top 10s. Let me know what you think.
Thank you for watching. Press the like button, hit the subscribe button, and join. Leave any comments below and join our Patreon to support the channel. I'm Doug, the Retirement Guy.